Hey everybody, Marty Mazorra. Going to do a quick whiteboard for you. This is at the request of a reader who asked me the question via email, is this rally all about the Fed, or is it, the way he put it was all this money printing? Is that the reason the market's doing so well? So I'm going to title this The Fed and the Market, and I'm going to start right out of the gate by saying it's an unanswerable question, truly. As you've read and you've heard me say, that in terms of what makes the market go up and down, it's really simply that it takes two to tango. In a market that's going up, buyers are coming with cash, sellers are reluctant to sell, and therefore prices have to be bid up to accommodate both the buyer and that seller. When the market's falling, sellers are coming with their shares, buyers are reluctant to buy, therefore prices have to be bid lower. I know the question is, what's inspiring one or the other? Why are people buying? Why are sellers stubborn at the moment? Is it because, as so many people say, it's all about the Fed and easy money? Well, let me just address the question this way and talk about what's currently going on in the Fed and how it's impacting interest rates. Quantitative easing is what they're doing. They call the current round QE3. It's $85 billion each month that they are creating and buying fixed income assets. A lot of that money is going to the Treasury market. So they're out in the open market buying really from banks. They're buying Treasury notes. So what happens is the banks go to the Treasury, say UST, they buy the notes. Okay, and then the Fed buys the notes from the banks. So essentially, there's this flow of capital that's going to the Treasury, which of course is accommodating the $1 trillion annual deficit, making it easy for the U.S. Treasury to borrow at these very low rates. We'll see what happens when rates begin finally to rise. Now, the Fed has made a commitment to do this until they see unemployment come down to a certain level, or inflation to get up to a certain level. So there's a whole other conversation that we'll have, and I'll continue to address the concerns I have about that on the blog going forward. But suffice it to say, they clearly, I think, I don't think anybody could argue that this isn't impacting interest rates in a big way. So how does that translate to stock prices? Well, the people who say it's all about the Fed, what they basically have to be saying is that the Fed is killing the competition. Killing the fixed income market, keeping interest rates so low, so stocks have very little to compete with. Honestly, I so want to resist that notion that it's all about the Fed. I'm going to tell you that it's more about fundamentals. When I say fundamentals, of course, I'm talking about corporate earnings. I'm going to change colors. Earnings have been beating expectations for many quarters consecutively now. It's the price of a share of stock relative to earnings for the overall market. PE ratios are historically compelling. It's the health of balance sheets, lots of cash, very low interest debt. Of course, you could say, well, the interest rates are low because of the Fed. Okay. But suffice it to say that if the Fed were this easy, but we didn't have these fundamentals, well, stocks wouldn't be doing as well. I think it's about earnings. You know, you can say the quality of those earnings. Some people question that because a lot of it's coming from cost cutting. I'm just saying that if earnings can maintain where they are or continue to improve, and if companies can hold expenses down, this market looks very compelling in the near term. As you may know, I like stocks long term just because I like owning the companies that are going to make the stuff that folks the worldwide will continue to want to buy over the long term. So is the Fed impacting stock prices? Sure. To what extent? Who knows? I'm not buying stocks because of what the Fed is doing. I can tell you that. Obviously, when you see the headlines pass and the market makes a dramatic move one way or the other, there's a lot of groupthink going on there. Traders primarily who are, trying to anticipate, getting excited or otherwise about what the Fed may or may not be doing. I'll maintain that when the Fed begins to tighten, now while the market may not like it short term, we should view that, quite frankly, as very good news because it suggests that the Fed thinks that that what you and I should know already is already the case, and that is that the economy can survive without it. The question is, long term, is the economy going to suffer with all that's been going on here at the Fed? That's over 5 minutes, so I'll just simply leave it there. I hope I've addressed the question well enough for my reader. If not, I hope to get, hopefully I'll get a follow-up question or two, and maybe we'll do this again. He asked specifically for a whiteboard presentation. So thanks for watching and listening, and have a wonderful rest of the day. Take care.